Feeling like you're juggling too many payments? Credit cards here, a car loan there, maybe even a lingering personal loan. What if you could roll all that into one simple payment and maybe even lower your interest? Today, we're diving into debt consolidation, what it is, how it works, and if it's the lifeboat you've been looking for. What is debt consolidation? Debt consolidation means combining multiple debts into a single payment, ideally with a lower interest rate and longer repayment term. Instead of keeping track of 5 due dates and 5 lenders, you streamline everything into one. There are 2 main types of debt consolidation. Debt consolidation loan. You take out a new loan and use it to pay off all your existing debts. Now you only have to repay this one new loan. Balance transfer credit card. You move all your credit card balances onto one card, usually with a 0% introductory APR for 6 to 18 months. It sounds simple, but there are traps if you're not careful. Let's explore the pros, cons, and everything in between. Why people choose to consolidate debt. Why consolidate? Here's why millions of people consider it each year. 1. Simplicity. One monthly payment, easier to manage your budget. 2. Lower interest rates. Especially if you have good credit, could mean saving thousands over time. 3. Fixed repayment schedule. You know exactly when you'll be debt-free. No more revolving debt traps. 4. Boost your credit score. Reduces credit utilization, on-time payments help rebuild trust. But it's not magic. You need discipline. Let's see if it's really for you. When debt consolidation makes sense. Debt consolidation is a powerful tool if used in the right situation. Great fit. If your total unsecured debt, credit cards, personal loans, is under 50,000, you have a steady income. Your credit score is 607. Plus, you're committed to not taking on new debt. Not ideal. If you're behind on payments already, you don't qualify for lower interest rates, you're dealing with student loans or tax debt, different rules apply. You're using it as a quick fix without addressing spending habits. Let's walk through the process. How do you actually consolidate your debt? Step-by-step guide to consolidating debt. Here's your step-by-step playbook to get it done the smart way. Step 1. Know your debt. List every loan and credit card. Include balance, interest rate, and minimum payment. Step 2. Check your credit score. Use free tools, Credit Karma, Credit Sesame bank apps. Aim for 670 plus to qualify for better rates. Step 3. Compare consolidation options. Personal loans from banks or online lenders. 0% balance transfer credit cards. Home equity loans. Riskier. Your home is collateral. Step 4. Apply for the loan or card. Have documentation ready. ID, proof of income, debt list. Don't apply to multiple lenders at once. It can hurt your score. Step 5. Use funds to pay off existing debts. Don't let that money sit. Use it only to pay off the debts you listed. Step 6. Set up auto payments. Prevent late fees. Build a strong payment history. You did it. But now comes the most important part, not falling back into the debt trap. Common mistakes to avoid. Here's where many people go wrong. Mistake number 1, racking up new debt. You freed up credit, but if you start spending again, you're worse off. Mistake number 2, not comparing all options. Always check APR, fees, repayment terms. Mistake number 3, ignoring the root cause. Budgeting and spending habits matter more than any loan. Mistake number 4, missing payments on the new loan. One late payment can damage your score, big time. The goal is freedom, not a fresh trap. So how can you stay on track? How to stay debt-free after consolidation. Background is a character climbing out of a dark debt hole and into sunlight. 1. Stick to a realistic budget. Track spendings, the 50-30-20 rule as a baseline. 2. Build an emergency fund. Aim for 3 to 6 months of expenses. Prevent future debt from surprise costs. 3. Use cash or debit for daily expenses. Helps avoid impulse purchases. 4. Check your credit report regularly. Spot errors. Track your recovery progress. 5. Celebrate small wins. Every on-time payment is a step toward freedom. Debt freedom is a marathon, not a sprint, but every step counts. And you've just taken a big one. Final takeaways and call to action. Zoom out to show the road behind them, full of paid-off bills. Debt consolidation isn't a miracle cure, but for the right person at the right time, it's a powerful way to take control of your money and your future. Here's what you should remember. Consolidate only if it lowers your cost and simplifies your life. Don't borrow your way into deeper debt. Use this moment as a fresh start and protect it with better habits. Want more real talk and smart strategies to master your money? Hit that like button, subscribe, and join the Money Map fam, where we turn financial chaos into clarity.